What do you make of this situation?
It's a mess. Russia appears to be trying to be cute about how they pay. They claim they've given instructions, but the instructions require payment from the reserves that are frozen. If Russia really wanted to pay, they could have taken other reserves and directed them directly into Euroclear, and the payments would have flowed through. So it looks to me like they're biding their time. They're in no hurry. They've got 30 days, and they're gonna manipulate the process as much as they can.
But Jay, for somebody who has done this before, more than a decade-long battle with Argentina, can you draw out how long this process might be for investors and painful moving forward?
I think it really depends upon, as you said, whether there's a resolution and whether sanctions are lifted in the near term. If sanctions remain in place past the 30-day grace period, I'm not sure Russia will be paying. I think they may take the view that they should restructure, and they shouldn't pay their, as they call them, foreign enemies.
Jay, from what I understand, there's another gigantic payment due within a month or so, something coming in April that is significantly larger than the payment due now. Is that a date to watch for?
Absolutely.
That will be a more meaningful date for a final end game here?
Absolutely. It's an amortization. It's around $2 billion. And this year, the Russian Federation has to come up with about $4.7 billion altogether. So they're not, in the scheme of what Russia thought it had in terms of reserves. They thought it had $630 billion in reserves. These payments are not large, but if you can't pay because the system is blocked, then you can't pay.
Jay, if we end up in the worst case scenario, what do you think recovery rates look like? What do you think the duration of the battle could look like?
If Russia remains under these kinds of sanctions and they decide that they're going to look for alternatives to the dollar-euro clearing system, they may decide that it's not worth paying these bonds at all to foreign investors. So I think there's it's a bifurcated case. They could be zero and they could be par. It's the strangest situation I've ever seen.
Here's the thing. We know that a lot of investors are offloading some of their portfolios. We've heard to U.S. distressed funds. Can you draw out the complications here purely from a financial perspective and then also from a reputation perspective here in dealing with what's a sanctioned entity?
Yeah, it makes sense for a lot of holders to sell just to get it off their balance sheet. But if you don't have reputational issues, it probably makes sense just to hang on to the bonds at this point and see what happens. If things do get worse and they go the direction of Venezuela, eventually the bonds will be traded to offshore entities, people who are not sanctioned. As in the case of Venezuela, a lot of those instruments will end up in the hands of locals, and they'll turn the bonds into another form of currency that they can trade for commodities or for investments. There are lots of things to do with bonds once they're in default, and I think the Russians have lots of ideas for how to do that if they go that route. Right now, it looks like they're going to try to avoid a default.
Could you talk through the broader portfolio impacts of a potential default here? What are the contagion possibilities? How big is Russia in the broad portfolio on average?
It's quite small. It's under 2%. But I think the thing that people should be thinking about is, what does this presage for investments in emerging market debt generally? There is a long, as rates go up, the tide goes out, and we see who's going to be swimming naked. And there are lots of countries that are going to have difficulty making their payments if they're foreclosed from capital markets.
Which countries in particular are you worried about, Jay? And could this become systemic?
I think it could be. I've got a long list: Pakistan, Egypt, Ghana, Zambia, Lebanon's in distress, Venezuela needs to be restructured, Sri Lanka, Tunisia, of course, Ukraine and Russia. Ukraine's going to come asking for debt forgiveness just because they can, and frankly, they need it. Then you've got countries in Africa, Gabon, Cameroon. It's a very long list of countries that are kind of on the edge and might be pushed over as rates go up and as people experience kind of angst over owning some of these names.
You know, I think back to what Ken Griffin had said right before the COVID crisis, what John Waldron over at Goldman had said, and they had all said that sovereign debt worries them more than any other risk, really. How bad of a sovereign debt crisis, Jay, can we see?
In the worst case, we're looking at something like the early 80s, when we had dozens of defaults in a very short period of time. It could happen here, and it could happen now.
Where's your safety play then, Jay? We talked about the biggest risks. Where are the opportunities emerging, or safety if you can find it?
I wish I could find it. I think there's going to be a flight to quality. There'll be in corporate names and in U.S. Treasuries. It's a tough time.
Yeah.
It's tough with the market, with the sanctions, not knowing what's going to happen. It's extreme uncertainty.
Can I just come back to this sort of idea that this could become systemic? How does that get dealt with, Jay, in this kind of environment? Every crisis is different. Are there parallels to previous crises that we should draw on? How will central banks, the ECB, the Fed, the Bank of England, the PBOC, etc., manage that kind of a crisis?
I think that the banks themselves are not going to have problems, because the banks are not directly exposed, at least in the U.S. In Europe, it's a slightly different story. But I think the risk here is that we end up with multiple debt defaults at the same time, and that's going to stretch people's bandwidth. We have better tools now, better understanding. Defaults are typically resolved more quickly, but if we've got 8 or 10 or 12 defaults, it's just going to stretch people's ability to solve the problem.
Well, I have a question here, not for the typical investor, but more for the distressed investor. Coming up, is this an opportunity of a lifetime, Jay?
It could well be. Could well be an opportunity for distressed investors to weigh in, and I believe they will. But the trick about distressed investing, especially in sovereign debt, is you have to buy it right. You have to buy it at a low price, because what you don't know is how long it's going to take. If the process goes on, as it did in the case of Argentina, for 15 years, you have to have staying power. And the staying power means you have to buy it at a good price. You're depending upon accrued interest and the ability to negotiate something favorable in the end.